what I wanted to discuss today in particular for our talk is the cable. And if you take a look at your screen, what you've got is a shot of the daily chart of the British pound US dollar. And the reason I want to bring this up is for a number of reasons, and certainly not the least of which is to discuss the pullback that we saw, but also discuss the pullback within the context of the patterns that are currently on the chart and the overall direction of the market, which I think is very important to consider when looking at any kind of correction, whether it be a bounce or whether it be a pullback. Okay. I could also bring into this discussion current moves on the dollar Canada. I could bring into this discussion, I think, even to a limited basis, really any pair that is trending, that's correcting due to either the move in the dollar, where we had a little bit of a move higher, or the move in crude oil, where we sold off about $3 in the prior session. Okay, so again, I'd like to focus on the cable, but then I think another interesting part of this discussion will be the dollar Canada as well. And one thing to keep in mind, even though I'm talking about this from a price basis, strictly a price basis, obviously there are different fundamentals that are affecting these markets. And as long as that's something we need to always consider, I also want to balance that with, as a chartist, part of your approach to data or news is the fact that you believe that it's been built into price action. So it's not that you're ignoring the news, you're just accepting the fact that it's already being reflected in what you're seeing on your chart. Okay? All right. So let's start off with, again, we're going to really go with a technical discussion, but let me at least lay a slight, I think, what is an overall backdrop to this move that we saw on the cable, on the British pound US dollar, and that was Governor King, Bank of England Governor King, started to voice his concerns about whether or not a rate hike was appropriate. And he kept referencing government indebtedness. So basically, he's concerned about increasing the cost of borrowing when you consider how much debt the government is in. Okay? So with that in mind, I think a very interesting aspect to the pullback was there was a pretty good defined reason, and we could really see the catalyst, which is Governor King basically telling the marketplace, we're not going to raise rates on the 5th. So what did traders do? They just wound it back. They priced out the rate hike. But they priced out the rate hike within the context of what I feel is more or less still a markup trend. It's still a daily chart that has consistent green grab candles, has still a 12 to 2 o'clock angle on the 34 EMA wave. Okay? What else does it have? Back on the 20th of April, it broke out higher through the resistance of what is a fairly shallow, but still the resistance of a rising wedge. Now, do I feel this rising wedge is necessarily a valid pattern alert for the context of the market trend that we were seeing? No, but I'd be remiss to ignore the fact that any type of pattern is just a culmination of support, resistance, trend lines. So even though I'm having my trend lines and my support and resistance kind of put together to yield some sort of pattern result. Okay? The fact of the matter is, when you consider a pattern as the pieces of this whole, in other words, ask yourself, anytime you see a channel, what am I looking at? Anytime you see a wedge, what am I looking at? You're looking at either trend lines and support and resistance put together in such a way that they form this familiar thing called a pattern. There's something very familiar and very comfortable about chart patterns, in my opinion, and that's because we know these shapes. We know what a wedge or a triangle or a rectangle or a channel is. There's something very familiar about them. And because of that, I think there's a natural comfort level we have with these things. I think what we have to inject into the interpretation and the analysis of chart patterns, though, is the underlying market trend. Okay? But you could always look at these types of lines and levels in your chart really as just automated support and resistance as well. Automated trend lines as well. So we broke out through the resistance line. Do I have to consider it a rising wedge breakout? No, but it was resistance that was broken out. Then, as the trend continued, okay, it was able to follow through, and we saw the market take on more of a 12 to 2 o'clock angle. Notice that then we got the two parallel lines of what I think is a channel up. You might call it a wedge, whatever it is. What are the pieces of the whole? Two uptrend lines, one acting as resistance, one acting as support. Now this is occurring within the context of an uptrend. So I've got the support of the 20 period simple. I've got the support of the 34 EMA high. If I was to draw a Fibonacci from the March 28 to April, I believe it was 28 move, the March 28 low to the April 28 high, we really are just hovering right around the 38.2% Fibonacci retracement. So there are a number of levels that could be considered more support for expectation of a continuation higher. There's your 38.2 right here. So my validity for not only this trend, but actually for this pattern as well, take a look. Okay, if I just extend out this line that was there, actually runs more or less along the 34 EMA low, and this line would be basically where I'd be willing to buy, continue to buy, with an expectation that the directional bias, the bullish directional bias of this market will hold, and then at some point support will turn into a resumption of the uptrend. But in fact, we ended up bouncing from the 34 EMA high and basically just above the 38.2. Now, remember, this is just the daily chart from which I will take a reading of, again, what I call that directional bias. This doesn't necessarily mean that it's the most tradable time frame, but it is the one off which I will determine what the dominant psychology of the market is. So let's go intraday now. Let's take a peek at what's going on intraday and see if there are other opportunities that we can consider. Now, one of the other setups that I was watching within the context of positioning myself at support was the possibility that we could see a correction lower, find support, this correction lower, find support, and trigger some sort of buying opportunity. Again, the buying opportunities are following the dominant trend. Let's not forget that. Okay? I believe I have this update on the Chartology blog from yesterday, May the 3rd. There's a number of places we have auto chartist or chart pattern updates, and the Chartology blog has, I believe, this update on the cable, but I'm going to walk you through it right now. So what happened? Again, let's start off with understanding this uptrend in the context of the daily charts uptrend. Let's take the next step, which is seeing that this uptrend is accompanying what? Not only a larger channel up, but a more narrow channel up. The larger one, of course, is here in the yellow. The one we're looking at right now, though, what I'm going to focus on here for our discussion, is the one in blue, which I'll just make a little bit bolder for our discussion. Okay? So what happened? We traded down through the support. Okay, triggering what? What happened at that point as we traded down through the support? This level right here, as prices broke the uptrend line support. And by the way, what else did it break? It broke the 34 EMA wave. The low of the 34 EMA wave, we had a reversal. So not only do we reverse the trend, and remember, we're talking about the trend as it applies to the 4-hour time frame. Okay, so let's not forget that. Specifically, this 4-hour time frame.